The pandemic has disrupted the world in a way that it's unable to foresee the future. Even then, NIO has performed tremendously well. This is what Wall Street analysts are saying about the stock. Stay tuned to find out how the stock will perform in the near future. Hello folks, welcome back to the channel. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. The stock market appears to be doing reasonably well on the surface. The Nasdaq, S&P 500, and Dow Jones Industrial Average indices are all down roughly 5% from recent highs, although they are still up significantly for the year. When you look closely though, you'll notice that many smaller growth stocks as well as some top-tier corporations are trading near 52-week lows. Investors interested in the electric vehicle market are certainly asking if the tech sell-offs have an impact on companies like NIO. When news stories are flying, equity investors might get anxious, leading to reactions based on bigger picture assumptions, resulting in sector-wide price swings. Investors must weigh this against the potential impact of company-specific information. NIO, a Chinese electric vehicle manufacturer, has had its stock price decrease by more than 15% in recent weeks, and a closer analysis suggests that the drop was caused by a combination of a sector shift and some short-term news from the company. Concerns about the economy's recovery from the pandemic, as well as the possible spread of the new Omicron variant, have weighed on markets in recent weeks. When market worries arise, fast-growing tech companies are usually the hardest hurt. NIO is an example of such a company that is yet to post a profitable quarter. It's understandable that a widespread sell-off in high-priced equities would include NIO. However, several company-specific concerns were addressed this week, providing investors with a potential opportunity as NIO enters what is expected to be a transformational year for the company. NIO surprised investors last month when it disclosed that only 3,667 vehicles were delivered in October. This was a 27.5% drop from the previous year. These figures contrasted sharply with the first 9 months of 2021, when deliveries increased by more than 150% over the previous year's period. However, in November, the company reverted to its previous growth rate, delivering a monthly record of 10,878 electric automobiles. The drop in October was primarily due to delays caused by work to improve the company's manufacturing processes in order to prepare for bigger volumes and new items. In 2022, NIO plans to release 3 new models, including the much-anticipated ET7 luxury car. It's also extending its European sales, starting in Norway and planning to expand into Germany next year. With the company's future growth in mind, long-term investors can take advantage of the recent sell-off to purchase NIO shares at a discount. Due to supply chain difficulties, the company lowered its output expectations earlier this year. However, it recently revealed third-quarter delivery numbers that were better than projected. Despite the fact that its output is only a fraction of that of larger competitors such as Tesla, about 25,000 to Tesla's 250,000 every quarter, the company is attempting to swiftly scale up its output. New factories are being built by management, which should allow the company to increase output and fulfill the growing demand for electric vehicles in China and around the world. Unfortunately, boosting productivity will necessitate a large amount of money. To help pay the needed capital expenditures, the business issued $2 billion in shares through an at-the-market offering in November. As a strategy to mitigate the negative impact on the stock, this structure drip-feeds fresh shares into the market. Even though an at-the-market offering can reduce the impact of a share issue on a stock's price, existing investors are still diluted. This means that each investor now has a smaller stake in the company than they did before the crisis. NIO's initial public offerings is officially complete, and the business now has the funds it needs to fulfill its expansion objectives. NIO, like other growth stocks, is not immune to market volatility. Investors shouldn't anticipate either stock to soar to new heights before establishing itself as a long-term market player. NIO, on the other hand, has a lot going for it that should help investors survive the current market storm in the short run. NIO is proving its mettle against a robust Chinese cohort of competitors while also expanding worldwide. For most investors, diversification into different EV stocks with a basket approach is one of the greatest strategies to combat volatility. NIO owns a racing team, the NIO Formula E team, that competes in the FIA Formula E Championship. However, after selling the team to Shanghai Lisheng Racing, it no longer sponsors the team. NIO's electric cars are also in hot demand, and deliveries have surpassed experts' expectations. For the third quarter of fiscal year 2021, NIO reported mixed results. The company lost $0.28 per share, which is more than twice as much as analysts had predicted. The company's sales, on the other hand, exceeded forecasts, increasing by 116.6% year-over-year. The sale of NIO's premium electric automobiles accounts for roughly 88% of the company's income. In the third quarter of 2021, the firm delivered 24,439 vehicles, up 102% from the previous year's period. It delivered 5,418 ES8s, its flagship smart electric SUVs for 6 and 7 passengers, 11,272 ES6s, its 5-seater high-performance SUVs, and 7,750 EC6s, its 5-seater coupe SUVs. Despite various supply chain issues, including a global shortage of semiconductor chips, the company's exceptional capacity to scale up production is demonstrated by the high number of vehicle deliveries. Vehicle deliveries in October were down 27.5% year-over-year, owing to manufacturing line upgrades, supply chain turbulence, and preparations for new goods, according to the business. The business anticipates vehicle deliveries in the fourth quarter of 2021 to be between 23,500 and 25,500, representing a 35.4% to 46.9% growth. In comparison to the fourth quarter of 2020, it anticipates revenue to increase by 41.2% to 52.2%. NIO's stock is extremely difficult to evaluate because it is still losing money and is unlikely to turn profitable in the foreseeable future. However, it is currently trading at 6.8 times forecast revenues, and its EBITDA and net normalized income margins are expected to be close to break-even in 2022, suggesting that EBITDA and potentially even net normalized income profitability might be achieved in 2023. As the company grows, gross margins are predicted to improve from 11.5% in 2020 to 19.7% in 2022, indicating that the company could be profitable in the medium to long run. The company has significant growth momentum and potential, with revenues predicted to increase by 120.3% in 2021 and another 72.2% in 2022. The average NIO price objective of $60.67 indicates an 88.7% upside potential. NIO is a major EV technology and manufacturing business that has received significant government support, competes in a high-growth market, and has a strong competitive position due to its brand, scale, and technological prowess. Furthermore, Wall Street is massively bullish on the company, implying that it has a lot of room for growth. The content in this video is for educational purposes only, and hence should not be considered as financial advice. So all the financial decisions should be made after doing your wide-spectrum research. Invest the money that you're willing to lose and invest in assets that you clearly understand. So make sure you play your cards right and you'll be able to make a lot of money with crypto. With this, we've come to an end. We hope this session was informative. Where do you think the prices of NIO will go from here? Do let us know in the comment section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.